What's up guys, welcome back to the channel. Hope you're all doing well. If you're new to the channel, don't be afraid to like, share and subscribe. It does help the channel out. Our goal for 2021 is to hit the 10,000 subs, so make sure you're subbed. Also guys, I just launched my Patreon sharing weekly and daily stock watches that I'm interested in. So if you're interested in that, go ahead and check it out in the link in the description. So guys, today we are discussing the P.D.T rule, the pattern day trading rule. We are discussing how to get around it, how to avoid it. So without further ado, let's get straight into it. Before I go to the main topic, I always want to answer one or two questions from my subscribers. So we're starting with high altitude. If I understand this correctly, I buy €100 crypto in the morning, sell it 150 an hour later, and reinvest 150 in the evening. Let's say I profit 1,270 from the rest of my trades in a year. So the above example is the only thing beyond the exemption. So yeah, you're pretty much correct there. You don't tax them on an individual level though. You tax them all together at the end of the year. So you add up your gains, you add up your losses, you take the losses from the gains, you take the personal exemption from the gains, and then whatever's left over you have to pay capital gains tax on, which is €120. So moving on, next question from Ivan. Yo, discovered your channel a couple of hours ago. When I looked up Irish taxes, I was worried about my GameStop gains. Do the gains from GameStop get added on top of the 35k a year income? Do I pay both 33% capital gains tax and 40% income tax on it? If so, I'm totally fucked and rather go to jail than pay those bitches. Okay, so starting off, so income tax and capital gains tax are taxed on two different rates, 33%, 40%, and they're two separate forms of tax. Now your income and your profits made at the end of the year will be added up, but you'll already have paid the capital gains tax from the profits that you made, so it will not affect your income tax rate. So moving on to the main subject, how to avoid the pattern day trading rule. First we need to understand what is the PDT rule, the pattern day trading rule. So we'll go through it first. So a pattern day trading rule is a rule set up to protect beginner investors from losing a lot of money to start. Now the rule is that you cannot buy and sell a stock on the same day more than 3 times in 5 business days. Now if you break the pattern day trading rule, your brokerage account can be banned up to 90 days. Now 90 days is a pretty long time when you can't invest. So now when you are banned, you can't buy shares, but you can sell your shares that you own. So we'll move on to who the PDT rule affects. So like we said at the start, the PDT rule affects beginner investors investing, but it also affects investors that have under $25,000 in their investment account. So if you've under $25,000 in your investment account, you are subjected to the pattern day trading rule. But if you've more than $25,000 in your investment account, you don't have to worry about the pattern day trading rule at all. The next part I'm going to discuss is the important part and will determine whether you can or cannot avoid the pattern day trading rule. So the next section I'm talking about is who polices the pattern day trading rule, who regulates the pattern day trading rule. So FIRNA is the financial authority that regulates the PDT rule. Now FIRNA stands for the Financial Industry Regulatory Authority, and it polices the PDT rule and enforces the rules governing registered brokerages, but only in the US. You can see in Google here, FIRNA oversees 3,500 brokerage firms, 150,000 branch offices, and nearly 625 registered security representatives. Now this is all in the US, okay? Now let's move on to the firms they regulate. So FIRNA regulates US brokerages like Webull, Robinhood, Charles Schwab, but also brokers such as Revolut that are located in Belgium, and also Interactive Broker that are located in Luxembourg. Now the reason they regulate these European brokers, Revolut and Interactive Brokers, is because they use third-party brokerages in the US. So Revolut uses Revolut, which is a third-party brokerage, and Interactive Brokers uses IB LLC, which is a US brokerage. So what does this all boil down to? Basically, any brokerage that is not regulated by FIRNA, the Financial Authority of the US, is not affected by the PDT rule. So in saying that, the best way to avoid the PDT rule is to go with a brokerage firm that is not regulated by FIRNA. Now the good thing is most European brokerages are not regulated by FIRNA. Train 212, which is regulated by the FCA, the Financial Conduct Authority in the UK, states the PDT policy was initially approved by FIRNA, Financial Industry Regulatory Authority, in 2001 in order to protect investors from big losses. Pattern day trading's main rule is that in order for a trader to engage in pattern day trading, he must maintain an equity balance of at least $25,000 in a margin account. While some brokers might apply the PDT rule, it will not apply to your account with Train 212. So yeah guys, if you have a European brokerage account, you can easily avoid the pattern day trading rule. Unfortunately for all the American investors out there, tough shit, you have to have $25,000 in your investment account to get around the pattern day trading rule. Just take a look here. These are the best trading platforms in Europe. Now the reason why I'm showing this, I want to look at the regulations of each of the brokers. So you can see starting with eToro is regulated by the FCA, the EU and the AU. Interactive brokers regulated worldwide, which would include FIRNA, therefore the pattern day trading rule applies. XTB, regulated by the UK FCA and the EU. First Trade, which is regulated by the SEC and FIRNA, so therefore the PDT rule does apply there. And finally the Euro, which is regulated by the AFM and the FCA, so the PDT rule doesn't apply there. Yes guys, so that's it for today's video. Let me know if you are restricted by the pattern day trading rule. If this video helped you out any bit at all, don't forget to give it a thumbs up, give it a like, as it does help the channel out. And if you enjoy listening to an Irish guy like me talking tripe on the internet, don't forget to hit the subscribe button. Also guys, I want to mention my Facebook discussion group, Revolut Trading Our Journey. We've hit 2,500 members, so it is good crack down there, so go check it out. So guys, with that said, I will see you in the next one. Peace.